is showing that the housing sector is super sensitive to small changes in mortgage rate in the current environment. Maybe people witnessed the 8% mortgage rate last October and then saw almost 6.5% late last year and in January. Now rates rising. This is beginning to pull back the new home sales, which were contract signing in the figure. So super sensitivity among consumers to mortgage rates.
Lawrence, we also had existing home sales rising just a smidge, though, to start the year. So, yes, the tick up in new home sales wasn't exactly as high as the street had been forecasting, but we are edging, I guess you can say, in the right direction. Does this at all point to maybe a more positive, slightly stronger housing market that we could expect in 2024?
I mean, there is definitely a large degree of pent-up demand, along with even delayed sellers, sellers who have life-changing circumstances, having additional child in the family, maybe a retirement age, maybe a new job that requires different commuting patterns. So all these delayed sellers are waiting for the rates to drop before listing their home, along with many buyers, because the home sales closing activity is reflecting the interest rate of what was occurring in December. Again, it was lower, but now here in late February, higher mortgage rate beginning to bite into some of the contract signings for new home sales. But let's also keep in mind that new home sale had their third best year since the foreclosure crisis of 2008, just last year. So this is clearly implying that there is a demand if inventory is available.
What does this mean in this interim period of time about some of the home improvement projects that people might even take on? And we think through to how some of our viewers may be receiving this data and how it passes through to some of the stocks that we track, whether that be Home Depot or Lowe's or, even the home builders out there and Toll Brothers, Lennar and so forth, where there's going to be this concerted focus on where, if you're not getting back into the housing market right now, where you are spending to perhaps enhance your own home ownership experience.
Multiple offers are still happening on those mid-price home and below. And also, it's a very good thing that the builders are beginning to focus more on the mid-price home rather than those expensive McMansions. So the median prices have actually come down, reflecting the builders focusing on more smaller size home. So that's a very good sign, and that's where the demand is heaviest. But the fact that there are multiple offers on the existing homes is implying that not all demand is being satisfied. We need more inventory, and certainly builders are helping on that inventory front slowly.
Is 2024, from your outlook, going to be the year where millennials are able to really fully throw pitches out there or even get into, as you mentioned, some of those mid-tier price new homes that are in construction?
I think 2024 will certainly be better than last year. The mortgage rate overall environment, even though there's week-to-week fluctuation, should be lower, measurably lower this year compared to last year. And again, the super sensitivity, mortgage rate comes down. We have Russia buyers going into the market. We just need to assure that there's more supply, especially at the local government level, whether it is trying to assure that there's no overly burdensome regulation that prevents builders from getting into the market, maybe looking at some of the zoning regulations. But we need to assure that more supply come onto the market, and that's how one makes the millennial generation, younger adults, to have a better chance at ownership opportunity.
Lawrence, when it comes to the builder incentives that have been offered, one of those obviously being the mortgage rate buy downs, how likely is it that those incentives are going to be around or here to stay for at least the next couple of quarters?
The builders are using all the potential attraction to get the buyers. They are saying to the realtors, bring your buyers, we will pay you a commission. And the buyers are also getting the attractive buy down on the mortgage rate, even with some price discount. But the builders are also doing very well in terms of their profitability. So even with these incentives, one looks at the profits or even the stock prices of the publicly listed companies, home builders. They have have done exceptionally well the past 2 years, indicating that there's plenty of demand. The builders need to keep up, ramping up production, because they are able to make those sales even with some incentives and price discounts.
So should prospective buyers count on more incentives to enter into the market?
The buyers should be negotiating hard, especially on the new homes where the inventories are plentiful by this segment of the market. But on the existing home, it is the sellers who still have the edge over the buyers. So one walks around the established neighborhood, those are existing home. But if one is looking at new subdivision with a construction crane, maybe that's where the better bargain opportunity is available for buyers.
All right, Lauren June, always great to get your perspective here. National Association of Realtors, a chief economist. Thanks.
Thank you.